Imagine being able to turn your home into a source of income. You've worked so hard year after year paying down your mortgage, and now I have an opportunity for you to take your biggest asset and turn it into cash. My name is Julian Giaquinto, and I'm going to be talking to you today about reverse mortgages. By the end of this video, you'll completely understand how reverse mortgages work and how they can benefit you in retirement. There's a lot of misconceptions about reverse mortgages. A lot of people think with a reverse mortgage, you lose title to your home. It's a scam. The heirs will not receive an inheritance from a home. That's not the case. Reverse mortgages are loan programs for anyone over 62 that owns a home and has considerable equity in the home. What we're able to do is convert a portion of their equity into cash. Best thing about reverse mortgages, they don't require monthly payments. The title of the home still stays in your name. And as long as you're living in the home, paying your taxes and insurance, you can have a reverse mortgage for as long as you're living. Unlike a traditional mortgage, where every month you have to make a payment and your balance slowly goes down, reverse mortgages require no payments. So you can live in your home payment-free for as long as you're living. Let's talk about payout options. With a reverse mortgage, we lend you a percentage of your home's value based upon your age. General rule of thumb is the bank will lend 30 to 45% of the value of your home. If you have any existing mortgages or liens, they must be paid off. Any additional money you could have access to in one of three ways. You could receive a lump sum at closing, you could have access to a line of credit, or you could receive a guaranteed monthly payment for as long as you're living in your home. How does a reverse mortgage come due? The first way is if you decide to sell the home. With reverse mortgages, there's no prepayment penalty, so you could sell the home at any time. Another way the loan comes due is if everyone that was on the reverse mortgage passes away. Whoever inherits the house would have 1 year to pay back the loan. Here's a very common example of how a reverse mortgage gets paid back. The homeowners pass away. They have an existing reverse mortgage of $400,000. The home is worth $800,000. The heirs inherit the home. They simply sell the house, pay back the $400,000 reverse mortgage, and the remaining equity gets left to them. What I love about this product, it allowed the homeowners to enjoy their retirement comfortably, and they were still able to leave something to their children. Now let's tackle some frequently asked questions about reverse mortgages. Do I need to be struggling financially to get a reverse mortgage? Absolutely not. A lot of my clients have a lot of equity in their home. They've been paying down their mortgage for many years. They're just looking for additional cash flow on a month-to-month basis. One of their biggest expenses is still their mortgage. So with a reverse mortgage, we get rid of their mortgage payments. The rest of the money, they could have access to a line of credit. That money can be used to pay property taxes and insurance, do home upgrades, or even just use for more disposable income. Can I use my reverse mortgage funds for purchasing another home? Absolutely you can. I have a lot of clients that want to buy a second home in another state, and what they're able to do is take a lump sum distribution out of their current home with a reverse mortgage and buy another home, all cash. One of the benefits of a reverse mortgage are there are no monthly payments. So by using this strategy, they're not subjecting themselves to an extra mortgage payment. So does the bank own my house? Absolutely not. A lot of people get confused when they hear reverse mortgage. A reverse mortgage is just like a traditional mortgage. The one benefit that a reverse mortgage has that other mortgages don't have is you're not required to make payments for as long as you're living in the home. So with a traditional mortgage, you make a payment every month and your balance slowly goes down. Reverse mortgages don't require monthly payments, so the opposite happens. Instead of your balance slowly going down every month, it's going to slowly go up. But as long as you're living in your house, paying your taxes and your homeowner's insurance, you can never owe more than the home is worth. This is an FHA government-regulated program. This allows you to stay in the home payment-free for as long as you're living. How does the bank make money on a reverse mortgage? Now we know with traditional mortgages, every month the homeowner makes a payment and a good portion of that goes to interest. With reverse mortgages, it's advertised there are no monthly payments. That is the case, but this is still a loan, so interest is being charged every month and it's just accruing and adding to the loan balance. The loan is paid off once the home is sold, and that's when the bank receives their interest. So let's go back to that example before that we spoke about the $800,000 home where the person passed away and there was a $400,000 mortgage. Now, they took out that loan 10 years ago, and they originally borrowed $250,000. They didn't make a payment for a number of years, so every month the loan balance grew, and after several years it grew to $400,000. When the home was sold, the bank was paid back the money that was originally borrowed plus the accumulated interest. Because there was a lot of equity in the home, the children were able to receive the difference. Who's the perfect candidate for a reverse mortgage? You must be over 62, must be your primary residence. It could be a single to 4-family house. Condo has to be approved by FHA. And last, you need to have equity in your home. Aside from the qualifications, a reverse mortgage is great for someone that has a lot of equity in their home and still has a mortgage. Perhaps it's for someone that's looking for at-home healthcare, someone that might be looking to increase their monthly cash flow by paying off high-interest credit card debts. Maybe someone that wants to do repairs, or someone that's looking to make their house perfect so they can age in place. Now let's talk about some of the responsibilities of someone with a reverse mortgage. Luckily, in the way of responsibilities, when you have a reverse mortgage, there's not much. You must pay your taxes, your homeowner's insurance, and live in the home for at least 6 months out of the year. How safe are reverse mortgages? A majority of all reverse mortgages are FHA-insured government loans. All applicants are required to do a counseling call, which is a 90-minute phone call that goes over the ins and outs of reverse mortgages by an independent counselor. Reverse mortgages are also designed with consumer protection. Number one, it's a non-recourse loan. What that means is someone can live in the home for as long as they're living, and even if their balance on their reverse mortgage exceeds the value of the home, there's no recourse to the estate or to the person living in the home. They're never forced out of it. Reverse mortgages are also not callable, meaning that the bank can never call the loan due. There is no maturity date. This is important because it isn't a private or risky loan. Everything is federally regulated. A reverse mortgage is a great way to turn your equity into cash without making monthly payments. If you'd like to find out whether a reverse mortgage fits your situation, reach out to us. Be sure to like, comment, and subscribe so you never miss out on new information.